Ciao, and welcome to day one here in Gaeta in Italy.
Great to hear from our very own Royal Hong Kong Team Agiplas, who are currently in Gaeta competing in the Liberty Bitcoin Cup, an event which now comprises 3 regattas culminating in one in Hong Kong.
From the Finance Ministry, we heard from the Reserve Bank of India on their views on cryptocurrencies and having a law which allows for global acceptance of global cryptocurrencies, or an Indian version of a cryptocurrency. How do you personally, as Finance Minister, view this debate? Do you think we're heading into a zone where it's almost inevitable that governments will have to come around to the realization that cryptocurrencies are here to stay? How do you view this outside of what we've already heard from the RBI? How's the Finance Minister viewing this entire debate around cryptocurrencies?
A cabinet note is getting prepared. It's almost nearing completion, and then it will be taken to the cabinet, of course. And I have said my view on this, saying the Supreme Court had commented on this cryptocurrency. Whilst we are very clear that the Reserve Bank may take a call on an official cryptocurrency or anything of that kind, but from our side, we are very clear that we are not shutting all options off. We will allow a certain amount of a window for people to use, so that experiments in the blockchain, the Bitcoin, or whatever you may want to call it, the cryptocurrency experiments and fintech, which depend on such experiments, will have that window available for them. We are not going to shut it off all. But yet, what kind of a formulation, even for a crypto, will have to be the content of the cabinet note, which will get ready soon.
Flory Marquez is a co-founder of BlockFi. Congratulations on all the money you've raised. What are you going to do with it, Flory?
Hey, Tyler, it's great to see you. And we have big plans for all of the capital that we raised. And to your point, we've grown exceptionally over the last 6 months. Over the last 2 months, we've had 50% month-over-month growth 2 months in a row. So the first thing that we're going to do with this capital is hire. We need more people to handle this growth and this demand, especially on client service. So we're focused on that. The second thing is looking at strategic acquisitions. So we need to grow, we need to get there quickly, and looking at companies that can help us get there faster, that have teams with similar cultures and products, is definitely something we're interested in. And third, we're going to stick to doing what we do best, and that's creating products. So one thing that's coming out is the crypto rewards credit card, and that product already has 180,000 people on the wait list. So what we're seeing just across this space is nonstop demand for these products, nonstop demand for BlockFi, and I expect the growth to continue.
Yeah, and it's not like you haven't been growing already. You had 100 employees about a year ago. Now you got more than 500. That's growth, and you intend to add more. Let's talk about the credit card, since you led us there. How on earth does it work? Do I put, not blockchain, do I put a cryptocurrency, a Bitcoin, on deposit with you? I get a card. How does it work?
So it's very simple. And one thing that we try to do at BlockFi is to try to give you products that you know how to use that help you get introduced to crypto in a much simpler way. So the credit card works just like any other credit card that you have, like a Chase Sapphire or your Amex card. The only difference is, instead of getting airline miles, which are not as useful today as they were a year ago, you're going to earn Bitcoin as rewards. So those assets will be available to you in your BlockFi account, and you can choose to keep them there to earn interest on them, or when you want, you can sell them, get some cash, and buy maybe more than a couple airline flights than you would have with just the miles. So what we're looking to do is just create products that are simple and easy to use and get people to own crypto using the products that they use every day.
Yeah, I imagine it widens your sort of the customer base. But here's the question. I mean, if you're extending credit based on an underlying security like Bitcoin, which, as we know, Flory, is susceptible to wild price swings, I mean, isn't that a big risk for you and your company?
So there's two separate products. The credit card is just like a typical credit card where we're going to be using traditional underwriting like a credit score. We also offer US dollar loans where people who have invested in crypto for some time, like let's say you're one of these new crypto billionaires, you can access liquidity without selling. So you can use your Bitcoin as collateral for a US dollar loan and borrow dollars as low as 4.5%. So we offer a wealth of products, both for existing crypto investors and for new investors who are looking to get into the space for the first time.
Can you answer the question, what happens when Bitcoin falls 10, 15%, and now you've extended credit using that security?
Oh, of course. So basically we manage liquidity just like you do against any other, when you're borrowing against a trading portfolio. Crypto borrowers have three options. You can give us additional cash to lower the loan to value ratio of your loan. Or in a case where crypto markets move very quickly and people don't post more collateral, we can liquidate a portion of their crypto to pay back the loan. And we've been doing this since 2018 and ridden all of the volatility in the market, and we've never had a default loss.
You say that you pay 8.6% on crypto assets in these accounts. How are you generating that income? It's not off the crypto, is it? Because it pays no income.
So this is actually one of my favorite products where people can send us cash and it gets turned into stable coin, or you can send us crypto. And what we do as a business is we take those assets and we lend it to institutional investors like Acuna Capital, Fidelity, and Susquehanna, many of whom are also investors in BlockFi. And they pay us a yield to borrow those assets, and we flow that yield through to our retail investors.
NFT. For your vanity. Computers never sleep. It's verified. It's guaranteed. NFT. For your vanity. Computers never sleep. It's verified. It's guaranteed. NFT. For your vanity. Computers never sleep. It's verified. It's
Obviously, it's not good for Bitcoin when a 1.2 billion person country says, we're not going to let you participate in it. I would tell you this, though. Every country almost that's banned Bitcoin has seen Bitcoin usage in that country skyrocket. Listen to what I just said. Every country that's banned Bitcoin has seen usage in that country skyrocket and usually overturns that ban 18 months later. And so Bitcoin's hard to ban. It's not like cocaine or are gold where you can catch people with it, right? It's on people's wallets, and if they really don't want you to find it, they can work pretty hard to not have you find it. Decision countries have to make. Are we an authoritarian country, or are we one that believes in liberty and freedom, right? Like, Bitcoin is about freedom. It's freedom to give your citizens a chance to say, hey, I need a hedge against what I perceive as bad monetary and fiscal policy, right? It's not a currency. It's just like buying gold. It's an asset. And so India's kind of stepping away from the future.
Talking about Bitcoin with you over these past years, but we were talking to Mike Novogratz earlier, and he was arguing that one of the reasons that that Bitcoin moved as high as it did over the weekend was, again, the stimulus money going there. Doesn't it suggest that we're overheated, or am I being too skeptical, if not cynical?
So you can look at many things that suggest we overheated, whether it's celebrity SPACs, where it was happening on certain of the crypto. But remember, this notion, which is a very powerful notion, Andrew, and I'm sorry for repeating, it's a rational bubble. As long as liquidity floods the system, we will decouple from fundamentals. So it will look like it's overheating, but it is rational because so much money is coming in. It continues to come in even as prospects improve. And that is the trade-off that investors have to figure out. Do they continue just betting on liquidity, or do they worry that liquidity itself becomes an issue? And that's what the market has been dealing with. And you've seen them the market has tried to adapt different ways through rotations. But that's what we're dealing with. In terms of Bitcoins itself, sorry, go ahead.
No, I was just going to go to where you're going to say on Bitcoin, and then I have a different question.
No, Bitcoins is fascinating to me because you have the positive adopters, and they believe that Bitcoin is a currency. Then you have those doing it for negative reasons. They don't trust the dollar. They don't trust bonds. They don't trust governments. And then you have another layer of speculation. And that is what's playing out. And it's been an incredibly powerful but volatile process.
We're going to be hearing from Jay Powell later this week. Do you expect him to say anything about this? And the other thing I was going to ask you, even apart from all this, is I don't know if you saw Janet Yellen over the weekend talking about taxes, including corporate taxes. Nobody seems to, it's funny. Typically, when the corporate taxes become a topic of conversation, the market gets frustrated, upset. You see it. Nobody's having that issue this time.
Yeah, Secretary Yellen's not the only one talking about this. They did so in the UK. But the reason why the market's not taking it seriously is the market lives in the moment, and the moment doesn't include tax increases. To the extent they'll come later. It may not happen. The standard is 50-50. So the market is not taking this seriously. As to what Chair Powell needs to say, it's really tricky. We've noticed that it's very hard to navigate this environment. People want to hear all sorts of competing stuff. I suspect that the best thing is for him to say nothing, but it's very hard to say nothing when you have a press conference. So whatever he says will contribute to some market volatility, because what the market expects him to do is magic. And I doubt that he can produce magic in terms of statements.
We've never taken $1.9 trillion, put it in a helicopter, and just flown all over the land, sprinkling it out. That's basically what we're doing. I actually read the bill. There's a lot of waste in there. I mean, it's really boring as hell, but you can find huge pockets of waste. And so as an investor, you have to try and figure out, okay, we're going to try and prop up a lot of dead businesses in this, and that's very ineffective and unproductive. And you have to think maybe 2 or 3 quarters ahead for what the real impact is going to be. The sugar high is great. You got to love the consumer. You have reports coming out now that half of this money is going into Bitcoin in the stock market. That was not the intention. It was supposed to feed people and let them pay their rent. That's how extreme we've gotten. At the same time, regarding volatility on growth, which I still say you have to stay the course on because it's empowering the new digital America 2.0, every time I get into a discussion about the volatility of software or firmware or chips or anything, I say, go look at the chart of Amazon over the last 17 years. Look at it, deal with it, and realize up to 38% corrections all the way through. So when tech has a massive correction or software sector gets soft, if you don't believe growth is still there, then of course you sell into it. But I don't think the story's over. We're not even in the third inning. So I continue to buy. That is my number one choice. I don't like value right now. Value is full of broken business models like the airlines, certain hotel chains, retail and commercial real estate offerings. These things have fundamentally changed, and until you sprinkle the $1.9 trillion sauce onto the economy, which is what's happening now, and let it percolate, let it distill, you won't know the outcome of those businesses. So I don't shop for value because I think there's a lot of dead stuff in there. And that's why it's value. It's on its way to zero or much lower and not that attractive long term.
Can you explain the move over the weekend? Obviously, we've come back now a bit. I don't know if we were discussing whether we call that a correction. Is 10% a correction in Bitcoin land?
You know, Bitcoin's trading like 100 vol instrument at this point. So yeah, 10%. I guess is within the one standard deviation up and down move these days. Listen, you know, the stimulus checks are coming. People are excited about that. A lot of the stimulus checks are going to young people who want to buy Bitcoin. But more importantly from that, in the last 3 months, we've had this secular shift where Bitcoin has become an asset. It's not maybe, it's not, it might be, it's now an asset class. Cryptocurrency is an asset class. Every bank is moving in, every tech company is moving in, and all portfolios are starting to move in. And so if you're not long, you're short. And that's just what you see on every dip. There are institutional buyers lined up to buy this thing.
So you think this weekend was institutions, not retail money?
No, this weekend was retail. What happens on the weekend is retail gets excited. You can tell because the cost of leverage goes way up on the weekend. And so the basis trading, different measures of how expensive it is to get leverage goes up. Then maybe one bad story, one nervous, moment, and everyone stops themselves back out. And so, from Friday afternoon, we're roughly 1% from where we were. And so if you're a normal market, you come in Monday morning, you roll up your sleeves, and you're like, okay, nothing's changed. Bitcoin goes 24/7. And so for the Bitcoiners, it was a big weekend.
Let's say this gets to $100,000 or $200,000. Does that take the wind out of the air of Bitcoin to some degree? Because at some point, you can't make these 200, 300, 400, 500% gains the way you could have, obviously, if you were buying this thing when it was under $5,000.
Yeah, listen, the law of large numbers kicks in, and it gets harder for it to go higher. Listen, in the long run, we're in this once in a lifetime secular shift where we had something that wasn't an asset class that's becoming an asset class. So every insurance company and pension fund and endowment and money manager needs to get something on the books. And so that's why we're having this kind of one-off secular shift. I think after that, Bitcoin will literally be like a report card for how citizens think the government is doing managing their finances, right? This is not a money, right? Bitcoin is a digital store of wealth. And so in some ways, if people think, Powell and Yellen really have got it together and they're going to be able to land this giant super tanker, grow us, at full employment and not have high inflation, people will stop moving into Bitcoin. But right now, people are saying, hey, there's a chance that this super tanker crashes. And as long as that story is alive, both here and abroad, right, we've kind of got the same problem globally that we do in the United States with profligate spending. And so I think at that point, yes, you could see the wheels shift. But until then, until people really feel confidence that we're not going to blow out, listen, this new stimulus was a 10% GDP deficit on top of a giant deficit, right? We're kind of in uncharted territories on how much money we're printing. And Bitcoin is a report card on that.
$60,000.
It's all in the process. We've obviously got a huge macro element of what's going on here with the Fed, with no other way out of its current predicament than to just continue to print money. You've got two major problems. Obviously, they are battling a lack of growth, but they're also battling the fact that they have a $28 trillion debt pile in the United States. So if they can't get growth, they can't stimulate jobs, then they can't end up diminishing that pile. So the only way that they can actually attack it at all is by devaluing it. And so this is what we're starting to see here. Massive monetary stimulus against the devaluation of the dollar. And that is having a push effect onto Bitcoin, which is already having a supply side crisis due to the halving that we saw May 20 last year. And then you're starting to see corporate adoption, institutional adoption to a degree that is so extreme. You've got 4 companies in MicroStrategy, Tesla, Square, and now recently Maitu. Between those 4 companies, they bought 40% of the annual supply of Bitcoin in just a few months. So we really have a supply side crisis in Bitcoin. This is only the early stage of the rally. Things are going to get a lot more heated from here.
So digital assets becoming more compelling in 12 months. What price will it be for Bitcoin?
I think we're modeling out about 175,000 for the price of Bitcoin by the end of this year. We think that the way that we're obviously starting to see this institutional adoption is really quite key, as well as obviously the corporates. You're seeing macro hedge fund managers that have been in the space for some time. You're now starting to see some of the bond guys get involved in this space. And this is quite critical. I mean, they've obviously been looking at, 20s of trillions of dollars of negative yielding paper, and they're looking around trying to see how does this paradigm shift, and started to look at Bitcoin and understand how this is actually a better store of value than gold, and it's digital, and every aspect that it compares itself to gold, it's actually improving on gold. So if you look at various aspects of stock to flow, the way that we've already seen 18.6 million Bitcoin already be mined out of the 21 million supply, we're already starting to run into an interesting ratio on a stock to flow basis. And so we think that probably by end of October into the latter part of the year, we're going to see that peak. And it could end up running through that, but 175,000 is where we've modeled out.
Many crypto players are looking to list, accelerating a trend which started last year. Will it be too crowded a market?
There's obviously a lot of players in crypto. I think we've seen 300 different exchanges globally. I think the change that you're going to see is the big focus on regulation. Even last week, we started to see even more action from the CFTC around exchanges that were accessing US residents. So regulatory focus is going to be the key. That was always the aspect we came from when building Diginex. But also, I think, a very heavy focus around KYC and AML. FATF, the global regulator, is implementing what's referred to as the travel rule this year, which is actually more stringent regulatory guidelines around crypto than we see for the current banks. So that's going to roll out this year. And we're going to see a lot of exchanges really struggle with how to actually deal with that within their frameworks.
Richard, what are the obstacles to Bitcoin going to levels that you just mentioned? And what about the whole idea of the blockchain behind it and the anonymity that it actually does have? Many regulators have looked at this very closely. What would happen if that anonymity was taken away from Bitcoin? What would happen to this currency, and what would happen to others which are also anonymous?
Well, actually, Bitcoin isn't anonymous. Once you start to be able to track who owns what wallets, then you can very easily map all the transactions within the network. In fact, the FBI, they use this quite effectively to track down criminals and shut down criminal activity. So Bitcoin itself is not particularly anonymous. The blockchain, it can be tracked very, very easily. We use the blockchain tracking tools to monitor all assets coming into our exchange. So I think that the idea of Bitcoin being anonymous is probably a little bit old, given what we're seeing around this FATF regulatory guidelines. This is all about identification of these wallets. So what you're going to effectively see is complete clarity around the Bitcoin network and what that brings. In terms of what can get in the way of the price, I think that if we did see a continuing spike in interest rates and for some reason the Fed deciding to reverse course, that would put a bit of a dampener on things. But as I mentioned earlier, I mean, the Fed is not in a position to be able to do that. They can risk deflation at no cost. It's absolutely impossible that they could allow for that to happen, especially when you've got a longer term technological backdrop that is very deflationary. You think about general purpose AI, self-driving cars, solar energy, all of these things are removing the human capital element of their production. And so jobs are going to be lost in droves, and the Fed is very aware of that. So even though they may react in the short term with a brief uptick in rates, they're going to be pulling that back very, very quickly.